Okay, welcome, Eric and Clyde. Good to have you with us. Eric, over to you.
Great. Okay. Well, thank you, everyone, I guess, but especially Clyde and Steve for this. This is going to be a recorded webinar, and we're going to go through the slides fairly quickly because the intent is that this package of slides be fairly self-explanatory. So, my advice, if you're listening to a recording here, is uh, even print out the deck if you want, or have a look at the deck where you might have questions, and then consider going fast forward through some of this if you're time poor. With that advice in mind, the intent is to cover uh, all aspects of the T3010, and we will update this recording and perhaps even do a live webinar occasionally. But this is a form that has changed a lot over the years, and there's quite a number of very recent changes. So we're hoping that by going through it line by line, this recording and these slides might be worth it might be a good resource for a couple of years at least. So a few key things right out of the blocks. It's really, really important to file on time. If uh, if you do nothing else, do that. We are going to walk through line by line and talk about some common misunderstandings. Steve will probably slow us down occasionally to ask some good questions for clarification. And one thing we advise anyone working on a charity to do is to look yourself up online. The CRA has public information based on the T3010 filings, a little pie chart of your revenues and expenses and so on. And it's well worth having a look to see how the outside world might look upon your charity or your church. So there's been a continuing shift over the last decade, but it's intensified over the last 3 or 4 years to moving everything online. New charities are very actively encouraged to apply online. You almost have to beg for an exception to get a new updated paper form. And the T3010, the annual, which is basically a tax information return for charities, it's still available snail mail, but we're very encouraged, and life is much simpler if we do it electronically. You have forms you can fill it online, updating of the forms, and even through my business account, you can upload everything, or even complete the form there. And Clyde can talk more about that because that's his preferred method now. There is still no requirement for a charity or a church to submit their tax receipts, but I see that coming. I predict that we'll see that within the next 5 years, and that will be a very interesting requirement for some churches, depending on how manual their situation might be. So, online or snail mail is the first test. Again, if you're filing online, you can go into my business account, or there's any number of providers who provide the fillable PDF files to do things online. If you're still doing a paper return, there's information on the back of the form, and there's a guide T4033 for you to use. And again, if filing, you can upload electronically using my business account or snail mail. Uh, Charitable returns are to be mailed here to Prince Edward Island. All other charity mail actually goes to Ottawa, but these T3010 returns, snail mail, do go to this address. So just as there's always things changing, I'll just recap here quickly. Tax receipts must have the correct CRA web information. They must say they are a tax receipt. Uh, the There's been a couple of refinements in the Income Tax Act recognizing that people are increasingly issuing receipts electronically. And of course, we have fillable forms, both as PDF files and online HTML guides. So that's in the last year, we've also seen a new schedule added that was really quite a change for us. That being Schedule 8. But the single biggest development is the fact that my business account is the use of one is basically expected now and very, very vigorously promoted. They'll very nicely try to convert you from paper to electronic filing. So it's a good idea to have the actual form in front of us. We're going to go through section by section. We have pictures of the various bits, but if you don't have it handy, you might consider printing off a copy uh, and following through that way to make things simpler. And it isn't that onerous a task if you have your numbers in place. And that's a key element. Yeah, I would think that before you start working on the form, you want to have your financial data at hand, and you want to organize it uh, in a way that you'll be inputting it. So I know Clyde has done a spreadsheet for his clients, and I'll show you a very simplified version of it. If you've got all your numbers ready and categorized already, then you're basically answering the form yes, no. Oh, if I said yes, I have to fill in a schedule, so I go to that schedule. So this is a simplified version, and the intent here is to uh, remind people to capture the different parts of the church operation. Most, if trustee, if there's any kind of reporting, separate reporting for investments or so on, those need to be consolidated into your reporting to the CRA. If your UCW avails itself of tax receipting as part of its fundraising activities, they are part of the church and their totals need to be rolled in. There might be a men's group. There could be uh, an outreach operation with a slightly different profit and loss. But if it's considered part of the church operation, the CRA sees one charity, and the treasurer is usually the person filing for that charity. So you need to aggregate information from potentially different parts of your operation. I just list asset, liabilities, revenue, and expense here, but you would need to take most of your balance sheet and your income statement and run those down at an account level to really get the maximum benefit from this. Clyde, do you have any comment on when you started doing this kind of thing?
The easiest way is a spreadsheet. I found I drop my profit and loss and my balance sheets out onto the spreadsheet, and then I've linked them all to accounts. And one of the pages that I use is basically line for line on what's on Schedule 6. So it takes a little bit of work to do it the first year, but the second year it's almost a drop and go.
Yeah. Well,
Well, and
that's
a
the
lot of
key.
the accounting software out there will do that for you. They'll give you a consolidated statement. We use Power Church in my church, and you can pull out an account statement on any one account, but you can pull out a consolidated account that includes everybody too. So
Yeah, but by doing what I'm saying, taking that output from Power Church,
mhm.
put it into a spreadsheet where it converts to what's on the T3010
Sure,
requirement.
that's perfect. That's so much
Yeah.
And
easier.
and as I say, it takes time to do it the first time round, but then it's there and you can use it year after year. Just
Yeah,
make minor changes
because
if they do that to the Schedule 6,
yeah,
which, touch wood, has not happened in 7 years.
Yeah. So again, if you're in the first year of being a treasurer, there is a lot of work in completing this return. But if you do the startup work correctly, it does get easier.
yeah.
So with that, do you know how you will split expenses or do you even know the categories that expenses are to be split out for the CRA? Most there's an important categorization where in lines 5,000 to 5000 to 50 uh, T3010, where you're asked to categorize your expenses as charitable, fundraising, or uh, management and administration. So that's one of the elements of your that you should build into your spreadsheet. Uh, a lot of smaller churches, I recommend they don't even bother mapping every single expense, but literally pick a defensible percentage. Your minister or your staff costs are generally considered primarily charitable. Your building expense is primarily charitable, and so if you identify some specific management and administration expenses, you might say that 93% of your work is charitable and 7% is management and administration. I say that in a smaller setting where you have volunteers who do a lot of the management and administration.
Yeah, my general way when splitting that out in these numbers, I look at management and administration and I split it out depending on the church at approximately 20 to 25% into management. And that depends on how much rental you do, because rental is not charitable.
Yeah,
Exactly.
Rental comes under management and administration. So you take a look at it and you take an expense figure, you allocate to fundraising, forget political, and the rest of it goes under charitable programs.
So again, this would be a summary spreadsheet, a little summary spreadsheet or part of your overall spreadsheet that takes all the expenses and funnels them into one of these categories.
Yep.
Okay, so the which form to use, and this is really important because that's the first the first reason a filing gets rejected is if it's not on the right form. You do need to know the historical forms because if you're doing a catch-up, if you've lost charitable status and need to file some back statements or something, you might need to go back to a historical form and make sure you're using the right one for a particular filing year. But right now, it's the T3010 24E, and it's available in large print. It's available in fillable PDF. It's available in print PDF, and it's the one to use going forward.
So Eric,
If you're going online to do your filing, this will automatically populate depending on the year end that you put in that you're filing for.
Yeah, just another reason, isn't it, to
Yep.
so that
they
was
build
going
in
to be
edits to save us from ourselves a little
so
bit.
that was going to be my question was that if you are this webinar is being recorded at the end of January 2025. If a new version of the form comes out, I'm sure, and if you file through my business account, you will be given the appropriate form. But if you're looking for a paper one, how do you find the right one?
Well, they will tell you, and frankly, so will we. I mean, so will the national office, the Mission Through Finance team, will broadcast this as well. But first of all, if you are using the preferred automated system on my business account, you'll always have the right form. Much like if you're using ADP for payroll, you'll always have the right payroll deduction amounts and most current CPP and EI factors, even though the government might change them each year. So this is one that we alert people to, and so does the CRA. If you went online there, they would always be telling you if there's a new form.
If you go in under the CRA forms and put in T3010, it'll come up with the current one, and it will tell you the other ones and the years that they were used for.
Yeah. Okay.
And they're
So
not
we're
going to change it halfway through the year. It's always going to be changed per calendar year if it's changed at all.
I wouldn't count on it.
yeah, we
Okay.
make no predictions about that, but generally it will be based on a filing year.
Okay.
Yeah.
Yeah. Remember that this form, this particular version of the current one, came in effective December 31st, 23.
Yeah.
So it wasn't even calendar year. It was one day earlier.
Yeah. Interesting.
So again, file on the right form. The deadline, not all, but most of our United Churches have a calendar year fiscal. So file by June 30th. And again, this form is intended to hold the charity accountable to the public. It's an information return. It doesn't throw off a tax calculation. But again, the federal government, through the tax break for charitable receipts, is subsidizing the sector, and this is why the focus of compliance tends to be on the resources being used for deferrable for charitable purpose. So, lesson number 1, 2, and 3 is don't miss the filing deadline. And if you do, you will be notified that your charitable status is revoked. You can't issue tax receipts. If you don't remedy the situation very quickly, everything on your balance sheet will be subject to what's called a revocation tax, which is 100% of your balance sheet.
Hmm.
So unless you can prove that maybe you wound up and granted your resources or something, but literally you need to account for every charitable dollar in a situation where you lose your charitable status. And you also end up paying a $500 fee or penalty to reinstate it and do all the back filing. So again, we can't say it enough. File on time. So what are the components? The overall form is a T3010. There's a separate exhibit where you list the directors and trustees. We'll talk about that. There's a separate exhibit where you list grantees, qualified donees that like the Mission and Service Fund, for example. And there's a new one, a T1441, where the CRA has tried to be a little more flexible and allow a degree of granting to non-qualified donees. And there are special rules around that. We'll talk about that a little bit in this webinar, and we have covered it in our treasurer workshops as well. With these forms, you also need to include your financial statements with notes if notes have been prepared. And if your financial statements weren't prepared by an accounting firm, which is quite common for smaller United Churches, the treasurer should sign and date the signature on the financial statements. So we're going to start working our way through the form now. At the very top of the form is just basic details: legal name and registration. And the very first question is one that folks get wrong a lot.
Hmm.
And this theme will continue. The United Church, your local United Church, is subordinate to a parent organization. The one incorporated body is the United Church of Canada under the United Church of Canada Act. So question A1, the very first question on the form, after you put your name and the effective date you're filing for, you answer the question yes, and you put the United Church of Canada and you put the United Church of Canada charitable number. The next question is one that folks get wrong too. Have you wound up, dissolved, or terminated? No. The key on this one is, even if you are winding up, it doesn't make sense to answer that question yes until you're finished. Because again, unless you clear your balance sheet and transfer monies to other charities and show where it went, you'll again be subject to a revocation tax. So that you should almost always answer that one no, unless it is your very final filing where you have closed or closed, and you're submitting a zero balance sheet. So here's what it looks like. Again, the very top of the form, getting off to a good start. Your name as registered with the CRA and shown on correspondence. That isn't always what you call yourself. A lot of us call ourselves pastoral charges, or we might even be registered with the CRA as pastoral charges. But the flip side is locally, it's Trinity United Church as opposed to Trinity Pastoral Charge. You need to use the official outside lingo, even if there is a different description internally within the United Church.
And where would
The
people find that, Eric?
well, it would be in any of their correspondence, or if they look themselves up on the charity website.
Thank you.
The CRA will always have corresponded to the extent that it does uh, to the official name. But it's amazing how often it's different. My own church, the Rosedale Pastoral Charge is how official communications come out to us.
Hmm.
When I first started as treasurer, I didn't know what that was. I said, "What is that? Aren't we Rosedale United Church?" And as it happens, we're both right.
Hmm.
Okay, so this is just a picture of what I just said, getting off to a good start. The next section is one that we learned a lot about during COVID. The CRA wants to know who the directors and trustees are, and this is tricky on a couple of levels. Uh, it's mandatory information. Some of the information is public, and some is not, particularly date of birth and address. And 10 or 15 years ago, I had, if I had sometimes people didn't want to provide their birth date.
Hmm.
But as a treasurer, you have to have that information. And so there's a mechanism for submitting that information secretly, but hopefully we're all past that by now. The uh, the other thing is a lot of people take shortcuts here on filing for it's a fairly convoluted little form, which I'll show you in just a second. But most boards are 6 to 10 people or something. We could have 30 when we count our trustees and our governing board. The United Church is very heavy on that. Uh, Best practice is to list everybody, but at a minimum, you should list at an absolute minimum. Well, the CRA asks that you list everybody. Those of you, there are folks who will file the an executive committee and trustees or something like that as a way of thinking of saving labor. But again, with the technology now, you used to have to retype or rewrite all this information all the time. Now they have it, particularly if you're working online. So it isn't as onerous to keep this up to date. And here's what the public information uh, looks like, and then there's the private information that these two would actually connect on the form. So again, it's a charity name, the name of the person, the term when they started and when they end is very important. A lot of folks got in the habit of just reporting for a year, so they put end dates on all their officials, and that just made a huge mess during COVID because the CRA looks at this to see who they're allowed to talk to. And if you've just canceled everybody that they're allowed to talk to, it created quite a fuss during the COVID years. And I think for all of us, we learned to uh, pay more attention to this kind of stuff. Again, the most sensitive item is in the very bottom right, the date of birth, but it is a requirement. And the CRA does or potentially could do a wee bit of screening to make sure that there aren't ineligible individuals, is the expression, people who've gotten in trouble with the law or something. Uh, but generally, they ask boards to screen for that as opposed to checking themselves. So again, name, and term, beginning and end is public information. There's also a question of whose arm's length. You always need to have more than 50% of your board and trustees at arm's length, as in not related, and I'll show a definition of that later on. So then we move to the next section of, again, gathering information. First question is, are you active or inactive? The next question is, describe all ongoing and new programs. And that's, I provide a sample here of things that a church might commonly say. We conduct weekly worship services. We deliver ministries. We support. You try to use active verbs because in the United Church of Canada Act, there really isn't anything about purposes, charitable purposes. It's a whole bunch of stuff about church governance and obviously it's for religion, but there isn't anything about the actual charitable activities. So it's very important to write down or to update this section each time you get. And this year, if you do, for example, give grants to non-qualified donees, you should list that as a new thing because it is like the thing they will test your spending on is it, first of all, is the work charitable? And are you the one carrying it out? So this is again the very, very start of the form.
If in that area, if the more you stress that you're connected with the community, the local community, the easier it is to get it passed through.
Yeah, absolutely. So the next form is a list of folks that you grant to. This could be this is historically this has been other charities. So it might be a local food bank, it might be social service agencies, and it's definitely the Mission and Service Fund of the United Church of Canada. So uh, in completing that form, you might think that giving to the Mission and Service Fund of Canada, that's an associated charity, but it is not. It is the that is a technical term that doesn't mean what most people would think it would mean. It's one we can safely ignore. If you want, you can look up the glossary to see what it means. But the other point that Clyde reminds us of is, again, you should pick up the address of the charity as shown on the charity website. And in the case of the Mission and Service Fund, it's not Toronto, Ontario, it's Etobicoke, Ontario. Now, I wait to see that anybody kick out a return for that, but who knows?
It's been questioned.
There you go. So again, here's what it looks like. For every charity, you're listing the name of the organization, the charitable number, the amount, and there might be some non-cash gifts that you're reporting. But in this case, I'd say there's one qualified donee. There could be many others in your local context. New for 2023, and we've talked a little bit about this in other treasurer webinars, is this notion of being able to report, to make what are called qualifying disbursements to a qualifying disbursement, but someone isn't a qualified donee, doesn't have their own charitable number. That used to be frowned on, and the intent, you still don't want to be a conduit making a gift tax receivable that wouldn't otherwise be. In other words, if you're just being a flow through to some entity and somebody wants a tax receipt, that's not on. You can't and shouldn't do that. But if you meet the local standards, if you meet the standards that the CRA is saying that, hold on a second, it is part of your mission, you do have a degree of control over it, then they're saying that they're going to have more latitude. And this is especially appropriate in church setting because the amounts will be smaller. You're not talking about $10,000 or $20,000 or $50,000. You're talking about 200, 500, maybe 2,000. So, and this would apply as well to entities, even if you happen to be supporting a global entity, this would apply as well. So there's a guide that's out for it. In fact, today the CRA just this morning had this is being recorded on January 28th, 2025. Just this morning, the CRA had one of a number of introductory webinars that it's doing on this subject. But we've been following this quite closely, so our information is very current. The general advice is don't do it. Most churches, you'll find that if you're actively involved, then you'll be meeting the church programming test that you have direction and control. The T4, this new form is intended to catch stuff where you are directing money to others, uh, and it's trying to show a little more flexibility. So here's a quick chart that folks have seen, usually in the context of working with other entities, whether it's globally or in Canada. And it's when you're working, you either deliver stuff with your own people, staff or volunteers, or you can work with intermediaries. But when you do that, you have to have that relationship documented. The same thing applies to making qualifying disbursements. You can now, have a broader definition, but you still have to meet the rules and tests. And here I list them again, folks. We're trying to go through fairly quickly, uh, so you can read the word, read it sort of word for word type thing. But the main item is it needs to be consistent with charitable purpose, exclusively used. The money you're giving needs to be exclusively used for that purpose, and you have some degree of documentation and proof uh, that satisfies you and the CRA that that's the case, that you aren't just funneling money for a tax receipt. And as proof of this, smaller grants, a grant over $5,000 needs to go on the T1441. If you have smaller ones, you don't even get them on the form. You report how many small grants you have and the dollar amount on lines 5842 and 5843. And just to go over this again in detail, if you make a number of grants to the same entity that goes over $5,000, you need to report it. But otherwise, you're reporting it for information. So again, I'm not taking you through this line by line because we have covered it elsewhere. The CRA recommends that you have documentation that shows the grant's purpose, exclusive use, and your due diligence. And your due diligence should vary. For a $200 payment, an email or something might almost suffice, whereas you might want to have a written agreement for a $2,000 or $3,000 gift. So moving on, the section C is a bunch of yes/no questions, which then potentially trigger completing a schedule. So, the simplest example is if did you pay people? Well, if you do, then we're going to ask you more questions about compensation in a separate exhibit. So, again, question C3, if you made gifts to qualified donees, then you need to fill out a form, the T1236. If you carry on work outside the country, if you support work outside the country, you need to complete a Schedule 2. That kind of thing. And moving right along,
Well, I was going to jump in on one comment there. Another
sure.
one, the positive thing for doing it online. If you tick a yes on one of those two questions, it'll automatically put that form in the deck that you have to complete before you can file.
Exactly. Yeah. Okay, thank you. So again, then there's a number of questions about fundraising, and occasionally a church, usually for a capital campaign, might contract with external fundraisers, where folks, and what they're really interested in is, that the fundraising ratios aren't overly abusive. So it doesn't come up very often in a church setting, but if people are making a lot of money off the fundraising effort and you're not, the CRA is going to be concerned about that. Question C8 is an interesting one, debate one, and well, first of all, I'll just go through question here. Question C6 is the different methods that you might use to raise money, self-explanatory. Question C8 is interesting. They say, is someone being compensated for the governance work they do, the trustee, being a trustee or a director on the board? And the answer is no, even though the United Church of Canada Act provides for the fact that a minister can be a trustee or even chair of trustees. Uh, that makes no sense in charity land where you you can't be a staff person and serve on the board, for example. But we take the view that you're not being compensated to be the trustee. You're being compensated to be the minister of the congregation. So that's splitting hairs a little bit, but that is the understanding that we have with the CRA. Question C9, if you have employees' compensation, we're going to talk about that. Typically, we don't have too many gifts valued over 10,000 that from outside of Canada, but if you do, you can appreciate that that might be, and in different times in our past, has been politically sensitive. Non-cash gifts. Now, my church, that's a big deal. Literally a third of our giving comes to us in the form of stock gifts. Appreciated securities, that's an especially tax efficient way to donate. And so at my church, that's a big deal to report on. Many other churches, it might not be. Again, question C14. Oh,
Well,
go ahead.
I'd make a clarifying there. If the stock gift, if it's handled through the United Church Foundation, then it is not a get non-cash gift because it's
because you
already
get cash from the foundation. Of course you do. Yeah, they liquidate it. Yes.
Yeah, then it's money from another charity.
That's right.
For our local reporting purposes, even though the person made a stock gift.
Yeah.
But the only way you can do stock gifts directly locally is if you get yourself one of those discount brokerage accounts, which is a fairly painful paperwork exercise. I did that for my church 20 years ago. It's great, it works now. But if you're only getting one or two gifts a year or something like that, I can say this unequivocally, the United Church Foundation offers the best deal I've found in terms of the lowest cost approach to that. They would issue the tax receipt and they would funnel direct the money to wherever the donor says. So this question C14 is interesting. If you've issued tax receipts on behalf of other organizations, United Church people, if they've done that, they quite answer it honestly. If you do, you should. That's a compliance issue. You should expect an education call from the CRA and a cease and desist. So literally, they're called education letters now. So again, the types of things that you might get that are non-cash gifts. The best one, in my opinion, is publicly traded securities. There can be lots of other things too, life insurance policies, artwork, building materials. But when you get into certain of these, you should be doing research before valuing them or even accepting them. Things like artwork, clothing, vehicles. There's all kinds of special rules, and the resources for online at the Charities Directorate of the CRA are very good. But again, putting a value on books, for example, is there's an element of eye of the beholder there, depending on how moldy they might be and how long they were in the basement. So you need to take some care, and there is special receipting rules and messaging required for this. Okay. Again, just completing the questions, the qualifying grants. This is a new question in the last year, C16. This is the trigger for what we talked about in terms of the T1441. If you have, the CRA wants to know if you're giving money to other organizations. And again, giving money to other individuals, even that is, they want to know about that too. So a key question C16 asks for that. Question C17 asks you to quantify or to basically say whether you have I'm going to say investments or maybe a property, a piece of land that isn't actively in use. Those are the most common examples where you have a resource that's property that's not being used directly in charitable activity. That triggers the new Schedule 8 that we'll talk about. So
So
very
is
quickly,
that
arm's
what
length.
does that mean, Eric? Is that investments? Is that, a lot of churches in Toronto sold their manses, and so now they keep a man's trust fund.
Yes.
The
Yeah, the
the
idea is that yes, you're deriving income from an investment or a man's
yes,
fund, but you're not using it day to day.
right.
And
So you have to report it here.
yeah, you report it,
Okay.
and there's very sharp accountants could probably get into ratios of what is
Hmm.
used or isn't used and all kinds of things. But as a practical matter, uh, it isn't a problem for 99% of United Churches just to assume that all their investments uh,
Hmm.
will, are not used in charitable programming. So here's the definition of arm's length, right from the CRA, and it's related persons or individuals who are related to each other by blood, marriage, or common law partnership or adoption. And this can be tricky in smaller settings where there might be like two, a small board of four or six, and some of them are related to each other. It's a fundamental rule of a charity as opposed to a private foundation that more than 50% of the directors are at arm's length.
What does related to each other by blood mean? I mean, you could be a third cousin 5 times removed, and that would still be blood somehow, would it? What are the rules on that?
Well, Clyde,
I know the rules for getting
Yeah,
married. You have to sign an affidavit of denying consanguinity. But what are the rules here?
mhm.
generally speaking, what they're looking at here is going out only 3 generations.
Okay,
It's your parents, your own generation, and your kids,
right.
and uncles, aunts, and cousins in that same basic
In those same
generation.
generations. Okay,
And again, what they're looking for there is undue influence because
yeah,
charities are always supposed to be for public good.
yeah.
Yeah,
And it's not that these folks wouldn't be doing public good. It's just it's a technical requirement.
Well, and
they,
they
back
don't have
back on
separate
the
interest, is what it says, which makes
Yeah.
sense.
yeah back on the form that we talked about earlier, the 1235 one where you list your trustees. That question's there.
Hmm.
The thing is, when you count them up, both parties to a non-arm's length are not counted in the total number of directors, the way the
Sorry, say
CRA
again.
looks at it.
I have a husband and wife on my board of directors. That means that they count as one rather than two.
No, they don't count at all.
They count as zero.
They
Oh,
count as
And
zero.
they
and
cancel
if
each
you
other out.
yeah, and if you had four, you'd be offside because half your board is related.
How interesting. Okay.
Yeah, see, at the moment, my own board, there are 8 people that
Yeah.
are active, okay? And we've got 2 couples on that board.
Oh my.
Yeah.
Okay.
It's a
Now, the
minimum
two couples
threshold.
are not related, so we're
They're not the two couples are not related to each other.
Yeah.
that's right.
Oh, okay.
But I have seen churches where they've got 4 people, 2 couples.
Yeah.
Normally, you don't count them anyway, but
Wow.
they are all related.
Yeah.
So you've got undue influence.
Yes,
Yeah.
of course.
And they are looking at moving that to a family foundation.
Yeah.
Hmm.
So folks, with that, I'm going to take us into the actual form completion of the numeric side now. And the financial reporting piece, again, it's a lot of work if you haven't done the prep work that we've talked about earlier in this session. If you have a mechanism, particularly if you can repeat it year after year, for sorting out and categorizing your expenses and allocating it to charitable activity and so on, year one will be quite painful, to be honest. But after that, it gets way better. So there's two ways to go. One is the short form. It's called Schedule D, and it applies. It was put in, well, probably about 12 years ago, and the intent was to make it easier for for small charities, to just file a little bit of information, sort of like a short form tax return. Uh, the problem is that there's 3 questions, And United Churches fail one of them quite often. Uh, the, the if gross revenue is below 100,000, well, we've got literally tons of those. Okay. The charity has not received permission to accumulate funds. That's virtually everybody. However, most or many of our charities have $25,000 in restricted funds or investments
Mhm.
somewhere or other. And that's a knockout. If you have that, then technically you're supposed to complete Schedule 6 instead of the short form Schedule D that we're going to talk about right now. Having said that, I've seen lots of folks completing Schedule D and getting away with it. I'm just saying there's a risk. Uh, so we'll focus more time on Schedule 6, but we are now going to just, for those smaller churches, we're going to just list some slides here that talk about what goes on there. And again, we're intentionally trying to be quite quick with the recording part because the slides are supposed to be more or less self-explanatory. So again, you have to first of all start with cash or accrual basis. We have a lot of folks who do cash type accounting reporting, which is fine. Uh, the summary of financial position has just a few things on it. We're going to look at it in just a second. And the biggest asset that could be reported here is our buildings, which quite often aren't on a financial statement. So, and again, if you are asked both on the short form and the long form to put in a value for buildings, even if it's not on your financial statement. So we recommend using a guesstimate even of market value. The idea being that if you were to sell it, then you'd see a sale asset flowing through.
So, Eric, I have a question. I have heard a number of people saying to me they value their building at $1 because it's owned by the United Church of Canada and not them.
Yep, and that's probably a fallacy that was propagated at different times by the National Church. But the local trustees act as beneficial owners in every respect. They can, they are charged with leasing it, selling it, renovating it, uh, keeping it in good repair, as long as a congregation exists. Now, the regional council is responsible for property and does have an approval in there. But as a practical matter, because the trustees with approval can sell the church uh, or otherwise deal with it, they are the ones that need to report it. As a, However, we also have buildings that are hundreds, in some cases, hundreds of years old. Again, my own church, which valuable downtown type church, is considered fully depreciated. And every time we do a renovation, we have to capitalize these little chunks
Hmm.
uh, of repairs. So there's like, some thousands of dollars of capitalization on a multi-million dollar
Asset.
asset that isn't on the books.
Right.
So again, using the church's own financial statement, did the church own lands or building? Yes. Uh, Total assets. This is the tiny snapshot asked for on the Schedule D. Again, it's a short form, and did the church borrow? They want to know if there's any like uh, non-arm's length agreements. So there, there's only 3 or 4 things they ask for on the form that most of us will have to fill out. There's about 30 things they
Hmm.
ask for. So here you can see the specific, they ask for tax receipted amounts, non-tax receipted amounts, fundraising, and that's really about it. Government money. For revenue, we listed here, I'm not going to talk about it because again, this is the short form version that will apply to smaller churches that don't have dollar assets. Expenditures, again, this is the kind of thing where it's funny what they ask for: professional and consulting fees, travel and vehicle, and all other.
Hmm.
You think they'd want to know, the big ones, right? And insurance, building costs, and stuff like that. But they don't. So at some point, someone statistically was interested in a few of these categories. And I don't even know, I cannot begin to explain why they ask for that. They do, however, ask us to again split the costs into charitable activity, management and administration, and fundraising. So that's the short form, and so all filings need to be signed by a director or trustee authorized on behalf of the charity. It's usually the treasurer. It must be someone listed on the T1235 for, typically
Mhm.
serving as treasurer or maybe chair of the board or something. And a third party can't say that the T3010 is great. A third party can prepare. You could have your accounting firm, if you have one. Clyde prepares a bunch of T3010s, but somebody else has to sign to certify that they're correct.
So if Clyde is preparing a T3010 for the 10 churches he works for as the bookkeeper, and he files them as online to represent a client, how do you, as the treasurer, sign the filing that Clyde has made?
Well, he'll explain that, but he puts their name and address and phone number on the form.
Oh, okay.
Oh, yes, and they will initial my worksheet.
Okay. So you keep a paper copy.
Of worksheets. I don't keep
Yes.
an actual paper copy of the form, but I do worksheets.
Okay.
There we go. Okay, so again, there's some confidential data, and again, you can see, where they want to know where the records are in case they do
Hmm.
an audit, the official address of the charity, and they do want to know who completed the return. So they want Clyde's name
Yep,
on there because if he's suddenly showing up on 200 returns that look a bit odd, they may want to look into them.
and they will.
Yeah, yeah,
Hmm.
absolutely. Okay. And it's funny, we talked about a couple of schedules already. Now we're into if you paid people, if you earlier in the form, if you answered yes and say yes, we pay people, then they want to know who, like again, how many, and they want to know what their pay splits are. And this is total compensation, by the way. So, most of our churches, like the national office, has more staff, so we report the top 10. Many churches might only have two or three, where they have to report the category and what the person is compensated. But let me just say that the compensation there is salary, and I'm going to say times 1.27 to capture all the uh, pension, uh, benefit costs paid for by the employer, the source deductions paid for by the employer, and so on.
So this is all
And
the employer costs as well as the employee sell
yeah,
or the employee receives.
they want to know the compensated the total cost of compensation that the charity is incurring,
Mm, makes sense.
and that's reasonable. They also ask about part-time, and we've got a couple of slides on this, and then total expenditure for part-time. And then total expenditure overall, and that's one where Clyde will talk to you a little bit about how these map now on the next couple of slides. So Clyde, do you want to take this one and the next one maybe?
Okay. When we're looking at compensation, and some places it's saying employees, but this actually means more than that because in the handbook that comes out with it, they do refer to bonuses, fees, and honoraria.
Hmm.
And so you don't pay honorariums to your staff,
No, guest preachers, pulpit
but you
supply, that kind of
do
thing.
for pulpit supply, you do
Mhm.
for other things. So what they're looking
Substitute
for,
musicians. Yeah.
yeah, what they're looking for here is anybody that you've paid for services rendered. Now, in
Well, wait a
some of the
minute. What about the
cases,
snowplow guy who plows my lot?
yeah, he's a totally different thing there because it's not part of the normal operations of the church.
And
Okay.
and tip
Now,
and if I may, that should be a invoiced
Yes, it is.
yeah,
edge charging GST, HST,
Yep.
etc.
All of that.
yeah,
Yes, of
yeah,
course it
so
is.
that would not fall into this area.
Okay.
But what does fall in here is anybody that you're paying like that. Sometimes they'll be over the $500 value for the year, so they get a T4A. But even the ones that you've only given $100 to need to be counted in.
Hmm.
So last year I had one church that I actually counted up 35 people,
Wow.
and two of them were ministers
Hmm.
because they had a change of minister partway through the year. So they are not
Mhm.
full-time, full year.
Mhm.
Each, each of them were part year. Sorry, I meant to turn that off before.
Yeah.
Anyway,
Yeah.
uh, each of them were part year, so they moved down into this bulk section.
Hmm.
And so, if you're hiring musicians every week or every couple of weeks, or you're doing a lot of pulpit supply, your number grows. And one of them that they did call me about was in one church where I had in the ballpark of $80,000
Wow.
in the compensation part timers.
Mhm.
And when we went through it and I included everything in it, they said, "Oh, you've done it right. Okay, goodbye."
Now, what
So
about permanent part-time?
still part time,
Yeah.
Okay.
So
still
the
part time
definitions
because the
here,
first section definitely says full time, full
Yes.
year.
Yeah.
yeah.
So, well, I am permanent part-time full year at my church, so I would be in the second.
You should be in the second section of it.
Got it. Thank you.
Yeah. And
And
all
for
of
the
this again,
purpose,
sorry,
for
go
the,
ahead.
for the purposes of here, full time is considered anything over 35 hours.
Yeah. And so all of this, folks, is again, staff cost is a big item for charities, and even how much people are paid is a sensitive point. So that's one of the reasons they're asking for these pay levels, because that becomes public information. They literally did publish that for the longest time on the website, and they've only recently stopped doing that.
Hmm.
But they still ask for the information. Uh, So again, this is a quick summary of what Clyde has just already said. The usual number of permanent part-time or permanent full-time people that you had. So you could have been vacant all year and had the minister for like 1 month full-time, and you would put one person in line 300. Is that correct, Clyde?
You wouldn't put anybody because he
No,
wasn't
because
there full year.
that's not permanent full-time full year. Yeah.
Yeah,
And
there
to
we,
isn't
it
the
has to be
usual
full
number
time,
though?
full year.
Isn't isn't the usual number one though?
No, it says permanent full time compensated positions,
Hmm.
Yeah.
and the
Okay.
other one says part year.
Yeah. Okay.
So,
So again, I talked about needing to gross up the salary by when the current benefit cost numbers with pension and CPP and EI and so on does add up to 27%. So this is what you would do for this section, and again, staff cost is something that the public does track and expects charities to be prudent with and so on, and that's why it's requested. The total expenditure also needs to map to a line on your Schedule 6. Okay, when it says how much did you pay for people? Well, Schedule C uh, has a total number, and you carry that forward into the financial reporting. And so I've listed some of the things that Clyde has talked about here. Okay, now we don't have outside questioners, and Steve, you've been asking questions,
yep,
enough to keep us honest. So we're going to keep moving.
please do.
Uh, okay, so again, if you're not eligible to do Section D, then you must complete Schedule 6, which is the detailed financial reporting. And you need to talk about whether you're doing cash or accrual accounting. And it's also important to note that because there are certain differences in definition, your statements, your filings won't exactly match your financial statements if they're done by generally accepted accounting principles, won't exactly match your government filing because there's some lumping in of categories. Mortgage principal payments and interest payments, for example, get lumped together, and in accounting terms, they're different. So the first thing is you fill out the schedule if your revenue is over 100,000. So all our larger churches and social service agencies and so on. Uh, we if you even if you're smaller but you have investments over $25,000, and the other one's just an old item really. So what you do is you break down your assets by category, short-term versus long-term investments. Uh, if you have non-arm's length transactions, for example, if a director lent the church some money, or maybe even some social impact bonds or something, you might have something to report. Uh, but the trickiest one is land and buildings. And again, our advice is a guesstimate. If you have a local real estate agent, an estimated fair market value for reporting, and lots of people put zero because it's not on the financial statement. But again, this is why your T3010 filing balance sheet reporting won't necessarily match your financial statement. If assets are being amortized, then you show that on the statement, as we'll see in just a second. Restricted funds, we recommend going on line 4170. And this line 4810, value of 10-year gifts, that was new and is now gone. So I'm going to delete that from the slide deck and send Steve an updated copy. But again, this is how quickly things change. For assets not used in charitable reporting, we're going to talk about that in detail. But for question 4250, they're not asking about investments. They're asking about any other asset category. So this is what it looks like. And most of it's self-explanatory: cash, short-term investments, and the things we talked about. But on the liability side, they typically aren't asking for things like fund balances. So again, you won't have uh, uh, a lot of the balance sheet. Your assets could potentially match what your financial statement says, but your liabilities almost certainly won't. Okay, and again, for liabilities, the things they care about, accounts payable in particular, that might be uh, loans owing, or if you accrue, the normal costs that a church will have. If you do deferred revenue accounting, and many charities don't, then you would also be spreading out your revenue for when it's going to be incurred, when the expenses related to that are going to be incurred. And again, these are the elements that you're reporting. If you have a church building, you're using all your you're certainly using your building for charitable purpose, for the furtherance of religion. If you happen to say be renting out a separate building or a plot of land or something, then that would fit the definition of used for other purposes. So again, my general advice is for assets, depending on how you handle reporting land and building, all the other numbers you would want to include from your financial statement, and someone looking at it should be able to find them on your T3010. For liabilities, that's not the case. So moving to revenues, you've got gifts, and and there's usually two kinds. There's tax receipted gifts, and there's what we call loose collection, or it might be anonymous gifts that aren't receipted and so on. There's various forms of it, but those are non-tax receipted gifts, line 4530. Clyde mentioned earlier an example where you might get gifts from other charities because they're supporting your work, but you also would get gifts like many people donate to Canada Helps, that will receipt your gift and then forward the money to the church. That would go on, that would count as money received from other charities. If you have a stock gift processed for you by the United Church Foundation with the proceeds forwarded to you, that would also go on line 4510. The trick then is to have information inside to know who those people were so that your stewardship tracking can be up to date, even though the money's coming in different ways. You'll note that there are a number of questions for government funding. This is very important for all kinds of social service agencies, less relevant to the church. But again, it gives you a sense of what they're asking for and what, statistically they're most interested in tracking. Does not apply to us, or if it does, at a very modest scale in isolated situations. Okay. So again, you get into how their tracking can vary. So they ask for interest in investment income, for example, but if it's negative, they don't want to know.
Interesting.
So that's, again, it tends to be somewhat cash-based, the thinking and the reporting that they're looking for. So again, here's a picture of it, just the kinds of things we've talked about, and I will keep moving. So one thing that, the unique situations are the ones to watch out for. So if there is a sale of assets, a building, for example, then you've got the gross proceeds, which might be the sale price, the gross sale price of something, and then you might have real estate commissions, you might have legal fees, that kind of thing, reducing the amount to the net proceeds. Gross rental received from buildings, all the items here, revenue sources from fundraising and so on. Sale of goods was an interesting one during COVID because there was some special definitions of that and whether our activity counted there. But this is the second part of the revenue exhibit. So again, they ask for more expense categories. Some charities do a lot of advertising and promotion. For smaller places, I have not gone to look for every single ad that you might have put in the newspaper or newsletter costs or how much of someone's time might have gone into preparing the electronic newsletter. I mean, at some point you could put it down as a percentage of your office costs or something, unless you have easy, accessible information for this kind of thing. Same thing for travel and vehicle. It's not typically, it's not insignificant in rural settings where people have to travel a fair distance for pastoral visiting and so on. But hopefully you have it as a category of expense that you can just pull out of your financials. One thing to note is line 4830 is the denominational assessment. It is not a gift. Okay, it is.
No.
It's basically membership dues.
Yeah, it's fees.
To the outside world. And again, you need to categorize them into the key activities, because that's what the overall summary that you're reporting to the outside world. This is one of the measures where, and there are now agencies out there that scrape all this data and rate charities on the basis of how much every dollar goes to charitable programming and so on. That's a very clumsy measure for a church, where a lot of our activity is community building and pastoral care and even how to allocate cost to those things. It's a bit of a clumsy measure. Even our governance structures are not designed to be just quick hit speedy, low cost. They tend to be a little more ponderous because that's part of gathering and part of our ethos. So again, we listed the different categories of activity. I would not, for most churches, spend a ton of time looking for $50 here or there for courses, education and training or something. If you ran a significant program that's worth reporting on, professional and consulting fees is a category to pay a little attention to, but you will have that data, quite readily available if it's audit fees or bookkeeper fees,
Yeah, invoices. Yeah.
yeah. Okay. So again, there's a picture of the exhibit that you'll be completing. But hopefully most of it's self-explanatory, particularly if you can follow Clyde's example of having done the work with it, to organize your costs so that uh, you you aren't going to look for every category, that you've done the pre-work so that you know exactly what you're going to put in occupancy costs. You'll be pulling together your building maintenance costs, your insurance, your hydro, your heating, those kinds of things, and wherever those numbers are on your books, they should just flow over and say, "Yep, that's what I want for line 4850." So then there's a couple of balancing items that I use, at least, or I have used in the past. I don't do a lot of these anymore. Uh, Total cost of all purchased, supplied assets, and so on. If it doesn't fall into some other category, then I put it into 4891 as a bit of a catch-all. And similarly, other expenditures, there's certain items that go in there automatically, grants that must be returned, premiums for life insurance policies, and so on. I have put refugee support in there myself because I haven't wanted to split out refugee costs in all these categories because it would actually distort the story. The story is that, we spend $50,000 a year to support two families or something. The story is not that we spent this much on rent, we spent this much on uh,
Sure.
clothing or whatever else. So that's where I have historically put refugee support. Clyde, do you follow that approach, or you
Well, yeah,
probably do something
definitely.
smarter?
No, you break out what you can of the church's expenses, but for activities like refugee support, lump it.
Mhm.
Great. Okay. So then we've got property not used in charitable reporting, and this is we'll show you exactly what that looks like. It's typically uh, real estate. There might be some unique circumstances across the country, and the funny part is you go back 24 months, so you're always dealing. You have to remember, okay, what year am I in, and what year am I reporting? Uh, So here's a summary of the key stats that will go on your public picture. Okay. How much of your money, your total expenditure is on charitable activity? How much is on management? Ideally, you'd have a ratio in the 80s or 90s for charitable activity, unless it was a very unusual year. If you were doing a major capital campaign, you might, for example, have significant fundraising expense one year, but generally not the case. And then at line 5050 here, you would add in the gifts you make to qualified donees. And that ends up being your total expenditure split by the broad categories that the CRA uses to hold charities accountable. So anyway, you typically don't need to request permission to accumulate property for a capital campaign. That dates back to much stricter times with disbursement ratios, disbursement quotas. And you typically don't need to reduce your quota, typically not needed for 99% of churches, but there might be one or two out there that have a historical situation. So again, here's what those questions look like. And then we say, I always want to see how something reconciles back to like my financial statement. How does that reconcile to the T3010? So for the income statement, you ideally would like to have as much of the revenue and expense. You'd like to say, oh, the total revenue is that, yes, and I can see there, and total expense is that. Um, but there are a couple of definitions. If you're paying loan principal back, if you have investment losses, as we talked about, then that's going to be a reason it won't reconcile. Again, a little stop for questions that we would normally have. Now I'm going to switch gears and talk about Schedule 8 and the new disbursement quota. This is all stuff that came out for the 2023 2024 tax season. And it's really aimed at foundations and saying that foundations shouldn't be hoarding cash and frankly should be investing at least 5% of their monies each year into good deeds so that they continue to qualify for charitable regulation. But again, the schedule exists for churches too. And if you have investments or property over $100,000, you're caught up in this. The form is not that big a deal. You need to look at the average value uh, of these properties. So your investments, you're looking back 2 years, you're adding any land values and so on. And when you factor in these elements, what you'll find is that this is a form completion exercise and will not materially impact 95% of churches or even more. So if there is a shortfall, a disbursement when you calculate it for that 5% or less that I just talked about, you can actually go back 5 years to get relief. And there's almost I have yet to see one case where a church has been totally caught up in this. There's one case. There's one church in Canada with investments significant enough to potentially hit this if they aren't also granting liberally as they are right now. So as I say here, Eric would not bother going back 5 years unless you do have a deficiency. You probably don't. And so now we'll just get into the guts of it. What is the property not used? And this is right from the CRA wording. It includes any real estate investments or other assets not used directly in charitable that may include cash in bank accounts, inventory, stocks, bonds, etc.
So the place where an awful lot of our churches would get caught here would be if they sold a manse and put the proceeds of the sale into a trust fund. And in most large cities in Canada, that trust fund would be larger than 100 grand.
That's right. So they would be a man's fund over 100,000 would be caught up in this
Yep.
and would trigger this reporting.
Yep.
However, even for a multi-million-dollar man's fund, it isn't typically going to hit the thresholds of being a problem.
Okay.
And that's the key.
So they have to fill out the form, but it's not going to cost them anything, is what you're telling us.
That's it. It's a reporting requirement and it's targeted to not us for the most part.
When we first mentioned this in our regular webinars, somebody after the first time went and did some calculations, and she figured it out that you have to have investments put on this sheet at valued around $4.1 million before it will even come close to affecting you.
Yeah, and that's without any granting or church spending.
That's right.
Like if you've got $4 million, you're probably also doing a fair bit of actual annual spend. Yeah. So again, this is so one of the things we wanted to flag because it has come up and we do have if a portion of the building is rented for non-charitable activity, you might want to include a portion of normally your church building won't be counted. But if you rent out half your space to a Montessori school or something, then you may need to include that factor as well.
Mm-hmm.
So again, when you add these numbers up, the first thing it asks for is what were these values 24 months ago? So for 2024 reporting, they want to know January 1st, 2022, and December 31st, 2022. What I've historically done is every time I go, oh crap, and I go back and have to pull my investment statements to see what they were. Okay. Uh, Much easier if you just log it somewhere and it's at your fingertips.
Mm.
But again, this would apply as well to real estate and what have you. So here's the actual form and calculation, and it's really important to show that for the first $1 million of like this could be investments, for example, 3.5% needs to be devoted out. So if you need to show that you're spending at least $35,000
On
on
charitable purposes.
granting or paying the minister or something.
Okay.
Okay.
So
So now as the number gets
if you've got $1 million in your bank account and you're not paying a minister even part-time salary, there's something wrong here.
exactly.
Yeah.
So this is why Steve, you said it so well. This is something of a numeric exercise, and when you go through the numbers, your blood pressure will go down. Okay. If you have 5 billion even, and you're still doing some degree of programming and have even say one paid minister
Yeah.
or a church office contingent or whatever, or for that matter, if you're just granting, if
Mhm.
you don't have any employees left and you do pulpit supply, but you're granting, you're still fine.
Sure.
So that's the key message through all of this. So again, then they say estimate for next year. You just roll forward your calculation, and again, they've got this business of the first $1 million or less. Remember, there's also a $100,000 exemption. And then for over $1 million, it's a 5% ratio. So again, you need to be spending $50,000 if it's over of every million over $1 million. It's not a big deal. And in fact, if you're not doing that, then it's hard to believe that you're doing faithful
That
work.
you're doing anything. Yeah.
Exactly.
Yeah,
Yeah.
certainly not being a charity.
Yeah. So now I'm just gonna. So that's the form, folks. Just a couple of reminders. Definition of qualified donee. There's a whole bunch of them. The main one being registered charities, but you've got arts organizations, amateur athletics, certain housing corporations, not all, and they need to be registered, so it's not automatic by any stretch. And if you're supporting other organizations, you need to use the logic of the T1441, which will be new to virtually everybody. And again, my general advice and the general advice of people smarter than me is if you've got a really mission-driven reason to support an organization outside of the qualified donee definition, by all means do it. But most places won't have to or need to. So, top tips and reminders and mistakes. File on time, whatever you do. If you haven't heard that message today, then we can't help you. Make sure your My Business account is current and accessible, even if you use paper. Okay, make sure that there's so often if a treasurer changes or people forget who has this, the local church should know and have backup. Clyde has recommended at least 2 or 3 people be registered on the My Business account. But one way or another, you want to keep that active because reactivating it is a pain. Do not put end dates on the T1235 if people are still serving. It's almost laughable how much trouble that caused for people when this issue surfaced during COVID.
I had somebody suggest to me that they should change the name from end dates to death date.
Exactly. You know what? Yeah, exactly. Do not put something on the T1236 that doesn't have an active charitable number.
Yeah.
Again, that is something that you will eventually be probably asked. It's either a mistake or you could be liable for 100%. And I've seen one church have to pay back over $200,000 for this.
Wow.
Do not put something on a T1236 unless it is a qualified donee. Make sure your tax receipts are compliant. And again, there's examples online, and we've covered this many times in other webinars. And I'm saying it now, I think for the fifth time,
Mhm.
and we don't always get it right. File on time, whatever you do. So with that, again, if we were a live webinar, we'd be opening it up for questions. Clyde and I are continuing for the foreseeable future, at least, with treasurer webinars and so on. But Harry Lee at the church office, who is my successor as financial officer, is also available. And again, thank you to all the treasurers out there. And if you're a new treasurer doing this, yes, it's a bit of a pain the first time, but give some thought to how much you can reduce the pain by setting things up, uh, not only for yourself, but for future treasurers.
Well, and when you're setting them up, keep notes about what you did, so that if somebody inherits your notes, they'll be able to do it the same way. That's one of the things I found in my church, is that we had a turnover of the person doing the filing, and we couldn't figure out what the previous person had done and what their justification was for putting things in different groups. And just a few notes would have been helpful. You're laughing
Exactly.
at me.
And the other way to, and again, my very sincere advice on that situation
Hmm.
is don't even try.
Hmm.
Fix it going forward.
Yep.
Fix it. If you ever have that situation where you've got a prior document and a very cursory look doesn't tell you how they did it, go back to first principles.
Right.
Yeah, start
It's a
fresh.
lot like having a minister show up at a church and say, "Well, I've always been paid for this, this, and this, this, and
Hmm.
this," and you know that may be true, but
Yep.
the current treasurer has to look at what's compliant and all that.
Thank you, Eric. Thank you, Clyde. It's so helpful to have these opportunities to hear from your experience and your expertise. Being a treasurer is hard work, and it's very detailed oriented work. And lots of the folks in our churches who do it are people with a good heart, but not oodles of bookkeeping training or accounting training. And so to have this kind of expertise available is terrific. Friends, if you are not already aware of our treasurers webinars for church treasurers, I hope you'll look into that. These special item webinars are important and valuable, but the ground changes. It's remarkable how there's new things to report every other month. So come and sign up for the webinars and get the new things fresh off the press. We'll draw this one to a close, though, and thank you for joining us, and looking forward to seeing you the next time.
Great. Thanks, everybody. Thanks for what
Thank
you
you.
do for our church.
Yep.
Indeed.